This episode of the Old Dogs REI Network is brought to you by Mino Studio.
In a world where jobs are how most people make money, one man, one desire, one challenge dares to break the mold. Welcome to the Old Dogs REI Network, where we don't work for money. Money works for us. Coming soon. Viewer discretion advised.
Welcome to the Old Dogs REI Network, where cash flow is king. Real estate investing, the means, so you can enjoy your retirement dreams. This is the show where we cut right to the chase. No sales pitch, no long monologues, just simple how-to real estate investing advice, so you can earn the passive income you need to enjoy your retirement today. And now, your host and chief old dog, Bill Manacero.
Welcome to the Old Dogs REI Network. I'm your host, Bill Manacero, and this is a show where 50-plussers and anyone else who wants to join us get solid, no sales pitch real estate investing advice to help generate real cash flow. This podcast airs twice weekly on Mondays and Fridays, and if you aren't already a subscriber, go to iTunes, type in Old Dog, spelled D-A-W-G, find our podcast and subscribe. Well, we have a real exciting show ahead for you here. Our guest is a real estate investor, but he's also a, economic prognosticator. Okay. Well, anyway, he's a gentleman who definitely understands the market, monitors the market, and has quite a history here. His name is Daniel Ameduri, and he is a self-made multimillionaire, full-time fact finder, and proud father of three. He credits his success to a strong desire to surround himself with the right people. Daniel has been in real estate for 20 years and has owned over 50 properties in various parts of the country, including Texas, California, Tennessee, Idaho, and other places, as well as owning multifamily units. After warning family and friends in 2007 about the coming market and mortgage collapse, he started his own YouTube channel, Visionary Victory, which has received 10 million video views. On March 18, 2008, Daniel predicted the Dow would reach 8,000, the collapse of Lehman Brothers, AIG, and Washington Mutual. During the mortgage crisis, he helped people buy put options on Countrywide Mortgage. These puts saw a gain of 1,400%. Wow. Not listening to his own advice, however, Daniel made a bad bet with Southern California's real estate market, which wiped out his entire income and savings, leaving him totally broke. With a special focus and passion for personal finance, he rebuilt his wealth and declared financial independence in 2012. Having no personal mortgage and enough rental properties to pay for his lifestyle, he was able to build his business larger than he could have ever imagined. Not by focusing on money, but by focusing on over-delivering value to his customers. He is the co-founder of the Future Market Trends Letter, FMT Advisory, and Crush the Street. Well, Daniel, wow, what a background and what a history here. Welcome to the Old Dogs REI Network.
Well, thank you for that lovely introduction. I do want to say it's Future Money Trends. So if my assistant put Future Market, I'm going to have to talk to them. It should be Future Money Trends.
That's just an old dog oversight here. It was written correctly. That is the Future Money Trends Letter. Yeah, sorry about that.
But I like Future Market Trends. We should check the GoDaddy when we hang up on this call. That's not a bad business name.
You know, I'm thinking hopefully maybe you can reflect some of that on your predictions ahead of us in the short and long term, right?
Absolutely.
Well, Daniel, I know that you have been involved in real estate and very active at one point. But as you'll share with us, I guess as you kind of give us your history here, is this is not your primary focus anymore, and maybe you can expand a little bit about what you're doing and just bring us up to date.
Sure. Well, I mean, my main focus today is with my publishing letter, and it's basically personal finance. I call it, for the new economy, and it's kind of a lot of it's my experiences on what I went through with wealth building. So it's got a lot of the ugly, embarrassing moments, the things that people would normally not share, but I'm sharing it with a bunch of strangers, so I feel good about it. And I also like to share ideas that I'm doing to make money right now. So I learned something that once I crossed a certain marker in net worth and just the amount of money you keep in a bank account, all of a sudden there were a lot of different investment ideas or savings vehicles that had never been advertised to me, that I had never seen of, or had just kind of thought of it as something that I would never use. And then I got introduced to a lot of these ideas. So I now I learn about them or read about them and I share. So most of my day is actually, probably the vast majority of my day is spent reading. But I still love real estate investing. So I have a few different things in my criteria of what I want, and with a few different realtors. And when those things pop up, they know that if they call me, I'll close the deal right away. For example, just 2 months ago, it was a Wednesday. They called me and said, hey, seller's in distress, property goes to foreclosure on Friday. And they called me because they knew that I would respond right away, show up with the check, bring the house current, the whole thing within 24 hours. So, I love real estate investing. It's no longer a full-time thing for me. Although I could technically make it a full-time thing, in the sense that if I didn't work, I literally could live off of the income that I make in real estate.
That's awesome. That's awesome. So that's still the case today then?
Yeah, absolutely. And it's more the case. So when I declared financial independence about 4 or 5 years ago, it was because I had very small expenses and a passive income that could pay for all of it. Today, fast forward, the expenses have gone up a little bit, but they're still discretionary. Most of my spending, if you looked at my annual budget or something, is being spent on travel and vacations with the family. So that could easily be taken down to nothing if I needed to. But the passive income in the real estate has gone up significantly, because I did take a lot of the positive cash flow since I still had active income. I was using passive income to actually pay off some of the properties, which I know there's kind of a debate on whether or not to do that or not. But you know what? I figured I wasn't trying to become a 100 millionaire overnight. And after 2008, my mindset really wasn't to get rich. It was more to not be poor. So I went ahead and paid off a bunch of them. And of course, that obviously makes the cash flow a lot bigger. So now the cash flow is into the 6 figures annually, which I'm blown away that it's achieved that level. And again, a lot of people think that to declare financial independence, you have to have millions and millions of dollars. But honestly, one of the tools that I used was just having such minimal expenses. So, look, if your monthly nut is $1,000 to $2,000 a month, the mountain is not that big to climb if you're trying to get passive income to pay for your expenses.
Right. Well, yeah, and I think there's a strong movement in that direction. The more people I talk to, especially on this show, that just really taking a look at your expenses and what you require to not just survive, but to be comfortable. It ends up being a lot less than most people think, and it is I mean, unless you're really pursuing the lifestyles of the rich and famous, so to speak. I mean, I really think that living a happy, productive, and comfortable lifestyle is not that expensive. So I think it's true what you're saying. One thing that really just as a question when I read your bio here is just this warning your family of this upcoming mortgage collapse, and I was just curious about that. Was this sort of a light bulb moment for you? I know you love to read, you love to research things. Was there just something that you saw that just before everybody else did that really just boom, let you know that this was going to be a hard one in terms of the economy?
I credit that prediction with a combination of I was out knocking on doors for foreclosures, and I noticed the notice of default list was getting bigger and bigger as the year went by in 2006 and 2007. And then I also was I was a loan officer, but I was only doing my own loans. But I was seeing who was in charge of all the funding, because Lehman Brothers was never really something. I don't think people actually received a mortgage statement from Lehman Brothers. Lehman Brothers was like the originator, and then it got flipped over, or they were like the wholesaler, and then it got flipped over to Fannie and Freddie or whoever. So, but Lehman Brothers kept coming up, and then of course they start to come up on the notice of defaults, and so that, and then I did love reading. I spent a lot of time reading about the economy and studying something called Austrian economics and just really kind of laying it out. And when I made that prediction, so when I got my father and everybody that would listen to me out of the stock market, selling all their real estate, I was able to figure out that WAMU, because in my first YouTube video, I predicted that Washington Mutual, Lehman Brothers, and AIG would collapse, as well as Fannie and Freddie. And I actually made the prediction in March of 2008, and I said that it would happen sometime in the fall, sometime between September and February of 2009. Well, I actually padded it. I was sitting there thinking it was going to all implode in June, July, or August. And I'm glad I padded it because it actually made my prediction dead on. But it was, a very difficult time for everybody. And it became a difficult time for me. And it's one of the worst things. I was 100% right, and I completely lost money. I should have made a ton of money. And though I did make some money from shorting the mortgage giants, I lost even more because I had confused the bull market and the bubble with brains, because I had started buying houses when I was 18. So by the time 2006 rolls around, I had only experienced as a young man extraordinary gains in real estate. So I was thinking, even though I saw that the ship was cracking and telling everybody else to get out, I was going in as big and as big as I could go. Because I felt that I had a window of opportunity to make as much money as possible and get out. Well, the most expensive property that I tried to flip listed it for $999 in Newport Beach, California, and within 2 days, Bear Stearns went under, and that's when the whole thing. It was just an endless string of real. So all the money I had made from the year 2000 when I was 18 to 2007, between 2007 and end of 2008, I had literally given all back. And it, from short sales to foreclosures, my credit got so wrecked. I still, to this day, it's 2018, haven't even made an effort to try to fix it. I have very, healthy financial sheet. I have done mortgages, but I've only done seller financing for the last decade, simply because I didn't want to deal with all the credit score stuff. And, I also hate paperwork. But it's just, it's amazing that, when your back is against the wall, sometimes that's when you become creative and really figure out how to do things.
Were you highly leveraged, at that time? It sounds like you're doing flipping, you're doing a lot of other, sort of quick turnaround things. You didn't have a lot of rental properties, though, I would assume.
Yeah, so there were some rentals, but most of it was flipping, and I was selling rentals to buy more flips because I was really trying to cash up on this thing. And that was one of the big lessons, of course, is speculating. I was literally speculating on these things, and I wasn't buying properties that were fixer up enough. They were properties where they just needed paint, carpet, blinds. So I wasn't getting the deepest discount, but the appreciation was making up for not having a steep discount. Now, of course, all of this ends up shaping the next 10 years of my life. So, if you would have talked to me in 2006, I would have prided myself as a young man saying, look, I'm $3 million in debt. I've got, $4 million in real estate and blah, blah, blah. And of course, I just totally blew myself up. But then you fast forward to how the next 10 years goes, it's a complete opposite, right? It's built on low leverage, high capitalization, all the things that scarred me and burned me. It ends up flipping. So this time around, I build up wealth, but I built it much safer, much more stable. Definitely, I've never walked into a deal or a rental that doesn't cash flow. Never walked into a flip that I knew I wasn't getting a ridiculous discount. And it wasn't because it needed paint and carpet blinds. It's because it was the property or the seller was extremely distressed. So in the end, of course, I'm thankful that this happened because it made me, I'm glad it happened to me in my mid-20s rather than happen to me at today. Like I'm 37 years old. I've got 3 children, small children, so in the end, it worked out.
My next question was going to be what was your biggest mistake? I think you might have answered that, but maybe just to clarify, looking back, what would you say that biggest mistake was?
Yeah, it's definitely, there's a few of them that come to mind. First of all, just being spread too thin, undercapitalized, which is a big problem for most people, most businesses that fail. And then on real estate specifically, if you guys are investing in real estate, never buy just for appreciation. And I say that with an asterisk because you definitely want some appreciation. You want to buy in markets that are appreciating. Even if you're looking for cash flow, I've run into the trap of buying these high income places in the South, $65,000 house. And guess what? 10 years later, the damn thing's still worth 65 grand. Well, that's no fun. You get an air conditioner replacement and that sucks out all the cash flow over the last 5 years. So you definitely want to have some appreciation, but I was literally banking on it, and that was my plan. It was a really bad plan. That's how I got burned.
Especially buying in California, I imagine, as you were. I mean that this is the land of of appreciation, supposedly.
Sure, yeah. And think of the mindset of a young guy, right? Like, so first being out of high school, I buy my first house, and it's going up $10,000 a month for the next 2-3 years.
Oh, that's crazy. So on the other side, what would you say your biggest success was? Obviously what you learned from that you shared, but what else?
I would say my biggest success was truly understanding the opportunity in owner financing, whether you're the buyer of an owner financing deal and you can negotiate a free market deal, everything's negotiable, the rate, the down payment, it all. I love that. And then recently, on the flip side, I've become the seller on owner financing deals, and I've been able to unlock that where I'm selling the property for more than I could have on the open market. I'm also getting an 8% yield on the property. So I think because I wrecked my credit score in 2008, I was forced into seller financing. Had no choice. It wasn't like I went to a Carlton Sheets seminar and walked out with all these great ideas. I had no choice, and it ends up becoming a huge blessing because I love it. I love the art of the deal. So on the buy side, I love it. On the sell side, I love it even more.
Now, in today's market, which I think is definitely more of a seller's market, are you still finding owner financing that obtainable?
I wouldn't say it's heavily advertised, although there are sometimes in some pockets of the country, especially the South, where you can find that actually people market it heavily. Now, on the seller side, they're trying to market their property up, let's say 10% for seller finance deal for a homeowner or first-time buyer who has a wrecked credit score. So on the buy side, which is most of us are probably listening to us thinking about the buy side, the seller finance deals usually aren't advertised. You've got to actually create them. And the way I usually create them is you have to find a distressed seller who's 5 days away from foreclosure or a distressed property, which is much easier. And I'll give you a great example. Foundation problems in Texas are you can't get a loan on them. So if a homeowner has a foundation problem, they're pretty much sunk in the water. They can't sell it to a normal buyer. Most investors are scared of it because they just don't know it. But what I accidentally discovered was that it's a really cheap thing to fix. In fact, I just fixed one today. Just finished it. The problems are in the range of $3,000 to $5,000. Okay, that's not that bad.
Yeah,
and you've got a seller here who can't do anything with the property, and no one even wants to look at it because they're all scared of it. Well, if you can go to that seller and say, look, ultimately you're trying to get $20,000 out of this property, or maybe it's less, maybe it's $10,000, and you can give them their $10,000. They transfer the property to you, but you keep their financing in place. And I know there's a due on sales clause, but in the history of real estate, it's never happened. But this is, of course, not legal advice. But So I'm paying their mortgage with, say, a 1 to 5 year balloon payment because all I'm going to do is fix it and flip it. I don't do this for rentals. But that's typically how the conversation will usually come about. I'll just tell them straight up, look, I've done this a dozen times or 2 dozen times. I can make the mortgage payments for a year. The property will legally be mine. Here's your $10,000 upon you moving out, and then fix and flip it. And that's considered a seller financing deal. It's a wrap or assumable. And I've done this actually probably a lot more than 2 dozen times, come to think of it, because I've been doing it for 10 years now. But that's typically how a conversation might go with a seller.
Interesting. So your focus is more on the distressed property, not so much the distressed seller then.
To me, the distressed seller is a bonus, but it's not something. Those are harder to find unless you're on the front lines of real estate and you're very familiar with things, or maybe you're a realtor in the office and you hear about a divorce sale or a very unhappy. I've had situations where I had a seller was distressed because he was divorced and his in-laws were living in the house. So that's a distressed seller, right?
Yeah, really.
I've had distressed sellers who just didn't make their mortgage payment because there was some sort of dispute in the relationship that they were involved in, or but a lot of times you'll find that distressed houses come with a distressed seller anyway. But I would say that the distressed seller in general is just harder to find. It's easier to find a distressed property because you can drive by it, or it'll be in the MLS notes that there's a foundation problem. You'll never see, in the MLS notes that they're not making their mortgage payment because somebody's not sleeping in the bedroom.
Interesting. Now, do you ever follow the pre-foreclosures? I hear a lot of people just don't even want to pursue that nowadays because it just very few of them actually come through.
Because of the market, we're in the seller's market with appreciation. I actually don't follow those anymore for that reason. You probably just gave people can just sell the home. Usually you can sell your way out of it. Now, just 2 months ago, there was a property that was or on its way to foreclosure that I was able to pull out. But those pre-foreclosure, those 30-day lates, I tend to leave them alone, or over 30 days, because I tend to think that people can just sell the house now. And if they bought it recently, let's say last year, it's not even enough appreciation for me to come in there and wiggle myself in for a deal. So I tend to leave those aside, probably for more amateur investors who are just looking for maybe a 10% discount. For me to make money, I need to see at least a 30 to 40% discount from the market.
Gotcha. It sounds like you're kind of approaching this from a very passive standpoint. I mean, you're not mailing out this or the yellow letters and putting out the bandit signs and stuff like that. It sounds like you just have some handful of brokers or agents that contact you if those deals come up. Is that correct?
It is correct. And I'm also connected to some of those people in real estate. I don't know if we still call them bird dogs or not. Who knows, might be offensive. But those people who send out those yellow letters, I love them because I just like to give them my information and they love me. I say, look, if you find this. And so I have reached out to some of them just to let them know, hey, I'm around. I've got some money here to invest if you guys find me the right deal.
Oh, that's great. That's great. Well, our audience here, we're, primarily, although there's a lot of folks that don't fall into this category that listen, but there are a lot that listen that are 50 years of age and older. They are either approaching retirement or they're already retired. And they are looking at real estate as a means to be able to supplement their income. Maybe they're looking as they're approaching retirement, gee, I'm not going to have enough to really maintain the lifestyle that I have now, and I'm looking for some additional cash flow, or maybe they have the funds set aside, but they're looking at getting the return so that they can maintain those funds. What advice would you have for that group? I know you're not officially an old dog here, but just from your standpoint, what would you advise them? What would be the best route that they could take? They're probably not looking for a full-time job here, so their time might be a little bit limited. And obviously they're going to be very concerned on the security side because these are funds they've, worked their lives to save. What advice would you have for them in order to, I know that cash flow is huge for you, and that is where you really focus a lot of your efforts. So what advice would you give to that group?
Well, first I would say there's always nothing wrong with just doing nothing. There's such a societal pressures, especially in the finance world, you got to reallocate your money as soon as it happens. But you talk to some of the greatest investors on the planet, like Jim Rogers, and they'll tell you oftentimes the best things they've ever done is just done nothing. So if you don't see an opportunity out there, don't pull the trigger. Wait. Be like an alligator investor who waits for that perfect moment. There's nothing wrong with being extremely patient. Warren Buffett himself actually closed his fund down because he couldn't find any good value in the markets back in the 60s. So the first thing is just there's nothing wrong with doing nothing. As far as finding investments, I would just stick with what you know. Be patient. Go slow. Be like me. I'm not out there looking for 100 properties a year. Some years I'll do one. Some years I'll do 10. But this year I think I've done 2 deals this year, and we're already in September. Mm-hmm. So I'm just patient. I would recommend that. There are alternatives if you don't want to be actively involved, but all these are less than 10 years. These crowdfunded things, they used to be accessible to hedge funds, but I don't understand I don't have the know-how to invest in first trust deeds, so I use Peer Street. I don't have the know-how to purchase commercial properties. It's not that I couldn't, but I just don't have any interest in it. So I use like Fundrise or Realty Mogul for private real estate investment trusts. But when it comes to those things that you want to be actively involved in, the single family house, this is something we all understand because we've all lived in either a home or a condo or apartment, residential living. It's not complicated. It's a matter of just taking action and doing it, and set up realistic expectations. Always pad your expenses and underprice what you're going to sell it for. And just keep in mind the loan officers, the realtors, they're all making a living off of you. So you are the only person you can trust in these transactions.
That's great advice. Great advice. Tell us about your business, quote unquote. I know it sounds like you're very independent here, but you're doing a lot of different things. Where are you going? What is sort of your goal? Where do you want to be in the next 10, 20 years?
I'm really focused on my family and my children and traveling. So I'm trying to travel the world with the kids. They've been to 10 countries in the last year.
Wow.
So that's my real passion and focus. On my business, I am very passion focused. It's a lifestyle for me, and it's a selfish joy that I get to share and read about money all day, and then simply share it on my newsletter. So that's I continue to plan to build the Future Money Trends letter, and we're trying to make more of a personal contact with everybody we speak with or everybody who's subscribed. It's free subscription. And honestly, my goal, I would love to be able to show up at a conference in 20 years or 30 years from now and sit down with 100, 1,000 maybe millionaires, people who become financially independent because they've read and practiced the Future Money Trends letters, recommendations and the ideas, because it's not complicated in the end. And the cool thing is I'm using real stories and showing real screenshots of different things that I'm like, look, all of this, being wealthy and being financially independent is attainable. I think people can do it within 5 to 10 years, but it just takes focus. And you have to literally declare to yourself that I'm going to do this. It cannot be something on the back burner. You're either going to do it or you're going to work for 40 years and just go through the normal protocols of life.
That's great. This time we're in right now is an interesting one because everyone pretty much across the board is saying we are sort of almost overdue here for a market correction. Yet we have one of the healthiest economies we've had in I don't know how many decades, right? Yeah. But okay, I'm going to tap into your sort of forecasting ability here to kind of give us your 2 cents on where we're at, where you think we're going, and if you want to go out on a limb here, when's it going to happen?
The when is always the hardest. I would say that anybody listening to this, there are some systemic risks out there because of interest rates and debt. We have to remember this economic boom has a cost. We're going to borrow $1 trillion over the next year. I do like the sustainability of how this recent economic growth is happening. Since the 2008 financial crisis, we've seen a lot of third-party intervention from central planners. You've got central banks buying stocks. You've got central banks buying bonds. You've got central banks buying bad bonds. You've got government spending trillions of dollars, hundreds of billion dollars on all sorts of government programs that eventually just have a dead end. With the tax cut and the rollback of regulations, the new jobs that are being created are sustainable jobs because they actually have a market force behind them. That comes from people's money, spendable power. I like that. And I also like the rollback of regulations because it did get excessive to where, you can't suffocate the businesses. So that I'm very happy with. I suspect that we will have a few good years here in the markets, mainly because everybody keeps pointing out that the bull market is old and ready to die. And that's just not how a bull market ends. A bull market ends in euphoria when the guy at the gas station is giving his stock pick. And, think about Bitcoin, everybody, just 6 months ago or a year ago. Think about all the people that were talking about Bitcoin at 20,000 a Bitcoin, and then it crashed down to like 4,000 or 5,000. So that is a good recent example of how does a bull market end? Or because it's a real estate show, think about 2007 when you'd read stories in the newspaper about people camping around the block to get in line for the next wave of KB homes, Riverside County, California. That's how bull markets end. This bull market, I think, has years left in it, 2 or 3 years perhaps. I think the Dow's going to 30,000 and 40,000, maybe even 50,000 before it's over. But at some point in time, and it's impossible to predict, there will be some sort of an inflationary shock to the system because of where interest rates are and because of all this debt that cannot be paid back. And I even spoke to a congressman recently, and I'm not going to reveal his name because I'm sure he wouldn't want me saying this, but I asked them, I said, do you guys in Congress ever talk about, hey, the debt's at 21 trillion, the obligations are 200 trillion, the people are in debt, the student loans are at 1.5 trillion. I'm like, what are you guys going to do? And he literally told me this, and I was shocked. He says, we all recognize that it can't be fixed. So the plan is just to keep going until we have to do something. And I was just like, wow. And then I was like, you know what? Shit, maybe that's not the worst way to think about it, because when it does reset, it's going to be ugly. So we might as well just keep partying hard until we can't.
That's crazy. I mean, it's even the idea of a balanced budget, seems almost impossible. With that kind of debt.
It's actually not possible. A lot of people don't realize this, but if you look at Social Security spending, Medicare, entitlements, and interest on debt, that's it. That sucks up the entire income of the United States. That's from one third of the income comes from income taxes. Then we have a bunch of other taxes, and now the tariffs. So you have to consider that before the president, a congressman, the mailman, a soldier, anybody, it's all borrowed. The entire federal government is borrowing after we pay for entitlement programs and our interest on our debt.
Wow. So you see at least another couple of years of prosperity here. Just kind of paraphrasing what you said.
Look, as a young guy with young kids, I'm optimistic and hopeful that between technology and a real economy, that somehow we can overcome this. Because the nice thing about it is, it's not as if the United States implodes itself economically and then the world just watches. No. Everybody's baked in the cake. So the Chinese, the Europeans, the Russians, nobody wants this event to happen. So that's the good news. We actually have everybody in power on the planet is going to try to prevent something like this from happening. A lot of people think that China just wants to take over the world, and I'm sure they do. But, look, they've got 1 billion people who, probably be in revolution if the United States imploded, because the Chinese economy would go right down with it, maybe even faster. So that's my optimism, is that everybody in power wants to keep this thing stable and organized. And, I hope that when there is some sort of crisis, that it's not like a hyperinflationary, ugly Venezuelan type crisis, but more of perhaps a managed reset. Perhaps, and now we're getting into conspiracy stuff, but who knows, maybe some sort of debt jubilee for global governments around the world, because it's not just the U.S. As Hank Paulson said, the Treasury Secretary during the housing crisis, the U.S. Dollar is the tallest midget in the room. So it's not that the dollar is the best currency that's ever lived. It just happens to be the best one out of a bunch of bad ones.
Yeah, it's almost like it's become in a global economy almost like the gold standard.
Yeah.
You're right. If we go down, a lot of other folks are coming with us, and that's the truth. Well, good wisdom there. Just strange. I have a lot of other questions, and definitely would want to elaborate here, but we're kind of running a little bit tight on our time here. We have this session we call our Wrap It Up session, where I ask you a series of quick questions so you can share resources and some of your wisdom in terms of some of the applications and resources that you tap into in your financial endeavors. So if you're up for that, I'd like to go ahead and start moving toward our Wrap It Up.
Sounds good. Let's do it.
All right. Let's start with, since you are a real estate guy, your favorite real estate book.
It's by Gary Keller. It's a very simple book. It's called Real Estate Millionaire.
Yeah, it's a great book. Great book. How about your favorite business book?
Rich Dad, Poor Dad.
Interesting. How about most valuable website for success, other than your own, of course?
That's funny. It's going to be a shocker, but Craigslist. Found a lot of deals on Craigslist.
Really? Interesting. Okay. How about favorite app?
My favorite app is I do use the Zillow one. It's a great quick reference guide to what's selling in the area.
Ah, great. And final one here. Now, you have definitely built up a great, I'd say, business and enterprise, but just a lifestyle for yourself. If something catastrophic happened, and you've been through this and you probably have a lot of experience here, but actually where you were just wiped out and all you had was $1,000 in cash, that's it, to try to rebuild what you have today, what would you do with that $1,000?
The $1,000 might be spent on some nice dinners with some very wealthy people that I'd be presenting deals to. So the trick is to find the deals and then present it to wealthy people and partner up.
So it's a relationship game, no matter what you look at, right?
Absolutely. And the best advice you could I ever received was to service the rich. And you have to think about it. If somebody knocked on my door right now and told me they had a great deal, I could own 50% of it, but I had to front the cash and they had the deal locked up, I just had to sign the dotted line, I would do it, because that's what one thing wealthy people have in common is they want to make more money. So it's a matter of just presenting them the right deal.
And that's interesting, because that's kind of the way your bio starts off. You credit your success to a strong desire to surround yourself with the right people.
Yes.
And that's very, very good advice. That's excellent. Wow. Well, we have zipped by here, and Daniel, this has been some great information and insight. I'm sure there's people that want to find out more about you and about the information that you are sharing with everyone here. And how can they find you and find this information?
Yeah, if you'll go to futuremoneytrends.com, you can subscribe free. It'll go more into my personal story, as well as what I've been reviewing lately as far as investments. And of course, each week I'll send out my weekly wealth digest, which usually has a story that my wife and I went through or did in the past, especially like some hard things that we had to do to really achieve financial success and financial independence.
Oh, that's great. That's great. So you do share just some economic personal finance principles as well. So that's great. And I might add, in just our conversation off the air, you mentioned too that you have other ways of generating cash flow that you share as well. I would assume in this newsletter as well.
Absolutely.
That's great. That's great. Well, gosh, Dan, this has been a really, really valuable, and I think for our listeners, I think there's a lot of meat here that they can walk away with. I appreciate your taking the time to be on the show.
Thank you for having me.
Also, we have a tradition here, and especially you being a young pup, we have to kind of indoctrinate you a little bit here. All of our guests get to close us out with their best old hound dog howl. So, Dan, this is time to wake the neighborhood here.
We're going to alarm the rat terrier that's sitting next to my feet right now, but I'll do it.
Okay, let's do it.
Ow!
All right. I bet you sparked up on that one there.
Yeah.
Well, great. Well, thank you so much, Dan. I really appreciate your coming on.
Thanks for having me on the show.
I also want to thank all our old dog listeners out there, too, for listening. Just I know there's a lot of other things you could be doing right now, but the fact that you've taken the time to join us means a lot, and we really do appreciate it. Please note everything we discussed here and that Dan shared, we have outlined in detail in our show notes, which are on our website at the Old Dogs website at olddogsreinetwork.com/blog. And then you'll just look up the episode with Daniel. I think there'll be a lot of great stuff there that you can open up to, as also get access to his information here, his valuable newsletter as well. Well, that is the show for today. Remember, cash flow is king and real estate investing the means. Until next time, keep moving forward and may God bless.
Thank you very much for visiting the Old Dogs REI Network. We would greatly appreciate if you would stop by iTunes and let us know what you think of the show. We would love if you could subscribe to the podcast, give us a 5-star rating, and write a review. The more ratings and reviews we receive, the more visible the podcast will be to others. Thank you.